Jerry, always great to see you.
My pleasure.
So I know you're really about, apparel and toys and merchandise in stores, but I really want to touch on one thing. We've been talking about the health of the U.S. consumer, but when we look at the auto report, down more than 2%, isn't that the one area that we supposedly had a lot of pent-up demand? What does it mean that we see auto sales decline by 2%?
Look, cars are expensive and they're often financed, so it requires, interest rates have a huge impact on big-ticket items. So absolutely no doubt that it's hitting the consumer across the board. And when I look at this report, there are just two numbers you really need to know. One is grocery is up 8.6% on a year-to-year basis, and the second is department store is down 3%. So the need to eat versus look good spread is over 11 to 12% difference in consumer trends. That's just massive, where consumers are being forced to spend their money on necessities and don't have much left over.
Yeah, you mentioned the increased price of food that we saw in the CPI report. Also, shelter costs went up 7% according to that CPI report. So what's going on? I remember back on Black Friday, I was out in the field. It looked like sales were going to be strong, right? It looked like it was going to be a really strong holiday season. What's changed since then? Has the consumer lost spending power or just confidence in their ability to spend right now with an uncertain 2023 ahead?
Hey, I hate to tell you this, Frank. I was on your show on Cyber Monday, the Monday after Black Friday. I told you then that was just a load of hooey, a hype. Black Friday was not good. It wasn't good at all. And so Adobe put out this report that said it's record sales on Black Friday, meaning online sales showed a 2% increase year over year, which is tragically bad. 2% increase in online sales. That's horribly off trend. And so, as I said a couple of weeks ago, it wasn't a good Black Friday. It wasn't a good Black Friday online. It wasn't a good Black Friday in the store. And it's certainly not a good Black Friday or a good holiday season for anyone who sells goods that are not necessities.
Jerry, we also saw November charge-off data showing a little bit of an uptick in delinquencies last month across some of the major card companies. So it's obvious there was a break in the trend, if you want to call it that. What's peculiar to me is we've all of a sudden had several months now where real wage gains have been above inflation. So I don't know if that's going to bail us out here with a little bit of a lag or not. I mean, what's your make of that?
Well, I think the consumer is getting more and more leverage, so they can't keep spending at the rate they were spending at before. I mean, we can look backwards and we can see that we've lost a lot of some of the government stimulus that was helping the consumer along. We know that credit card spending is starting to increase again. Consumer leverage is starting to grow. So there's absolutely no doubt that we're seeing signs of a stretched consumer. I love the American consumer. She will spend until she runs out of money. And what we're seeing here are so many signs that she's starting to run out of money. I mean, basically, she's spending money on food. Gas was the other big number in this. Still up big year over year. The amount of money people are having to spend on gas. And then people are doing one thing. They're going out to eat. So you see nice increases in restaurant sales, which is that whole reopening phenomenon. People are also spending on services that's not in these reports. So these reports have no information about airlines or hotels or other travel or services. But keep in mind, a lot of that is price inflation for the same airline flight.
Real quick, Jerry, is it possible that this was just pulled into October? It's an Amazon effect?
There's no doubt some of it was pulled in October. I think the retailers were racing to be the first one out under the theory that they didn't have to be faster than each other, just faster than the bear, just faster than the slowest retailer. So they pulled a lot of sales in October, but it doesn't mean that it's coming back. In other words, they spent some in October, November is down. I don't hear from anybody out there that sales are like great guns right now. It's only 10 days left to Christmas. There's almost not enough time to make it up. And the retailers are promoting wildly. I mean, there's incredible promotion out there, which means what we aren't even talking about now is what impact will this have on retailer margins. So sales might not just be soft, but their margin rates may get hit. Plus, we could have another, I hate to say this, but inventory hangover as we get to next spring.